Hello, you're watching ABC News 24. I'm Whitney Fitzsimmons. We're waiting for the outcome of the Reserve Bank's monthly board meeting on interest rates. Currently, the official cash rate stands at 3.75%. And with me is Peter Wright, the ABC's business editor. So, Peter, have we seen a result yet?
Yes, Whitney, we have a decision. The Reserve Bank board has cut the cash rate by 25 basis points to 3.5%. And that's the lowest level for the cash rate since October 2009. Just after the height of the global financial crisis. So it seems that the Reserve Bank board has decided to make a concession to the very tough economic conditions around the world, particularly in the United States and Europe. So the big question is, will this be the end?
It is interesting, isn't it, Peter? Because the big question, as you say, is, will this be the end? Do you think that we will see follow-up cuts in further meetings?
Well, just looking what the Reserve Bank has been saying in its statement, and it's noted that market sentiment has deteriorated, and we saw pretty big evidence of that yesterday when $23 billion was wiped off the Australian share market. It's highly likely, given a cut of 0.25 percentage point today, that there will be follow-ups, perhaps two by the end of the year. The timing of that is a bit unclear at the moment. I think the big factor, Whitney, really is the Greek elections, which are scheduled for the 17th of June, so 2 weeks away. And really, the central banks right around the world are going to have a much better idea as to whether or not Greece is going to stay in the Eurozone once they know if the pro-bailout parties are re-elected. So that's going to provide either some certainty or some fairly volatile periods ahead.
Indeed it will. And also it's interesting, this decision from the RBA. I was interviewing Ivan Calhoun earlier in the day on Business Today, and he said that he had never seen a situation where economists had changed their minds right before the meeting. Is that sort of, did you find that interesting
too?
Yeah,
that's spot on. Normally there's a pretty clear consensus with those economists that are polled by the various wire services about how the Reserve Bank is going to move. But this time there was broken up between those who thought the Reserve Bank would keep its powder dry or cut by 25 basis points or even go for a follow-up 50 basis point supersized cut. So it was all over the place this time, but I think that in the end most economists had got around to thinking that if they did do something it might be 25 basis points. The question now is, given that it's the 0.25 percentage point cut, how much will the commercial banks pass on in full?
Well, indeed. I mean, do you anticipate that they will pass any, if any of it on at all?
It's an interesting discussion because the view was that if there was a bigger rate cut of 0.5 percentage point, that might actually send the message to banks that they could hold on to some, as they did last time. And there is a view that the smaller 25 basis points might actually put additional pressure on the banks to pass the lot on in full. And if there is the usual debate about holding back, we can be sure that the Treasurer, Wayne Swan, will be poised even as we speak, ready to read that warning out to the commercial banks.
Well, and Wayne Swan was out in full force this morning trying to discuss the central bank decision before it had actually met, saying that he wasn't wanting to sway the decision. What was your reading of those comments? Well,
I think the bigger concern for Wayne Swan is whether or not he will be able to maintain the government's commitment to a budget surplus in 2012-13. That, of course, is being held hostage to potential breakup of the Eurozone or a bigger strife in the United States, which was underlined by those disappointing employment figures out of the United States. But certainly a breakup of the Eurozone that has the potential to drag Spain and Italy into the crisis could well mean all bets are off as far as that budget surplus being reached. But Wayne Swan was very clear to say that no one knows what's happening in the future, but for now that budget surplus is happening.
And it's interesting to note, because we did see such a big fall in the markets yesterday. You know, for some time what the central bank did, that's what the banks did. But then we saw these sort of out-of-cycle interest rate rises, those sorts of things. Is this enough to calm markets down then?
I think it sends the message that the Reserve Bank is alert but not alarmed at the moment. There was that other view that if they did go for another 50 basis point cut, it might actually send the message that they really, really are worried. We haven't seen anything yet that they believe that the Eurozone is about to implode, but that quarter of a percentage point cut really is just a bit of a tap that sends the message to the economy that we want to provide some stimulus. We know that some sectors in the patchwork economy are doing it tough. So here's what we're giving you now. We'll see what happens later on in the year, but just as a bit of an indication, before the decision hit, the Australian dollar was buying 97.5 US cents. It's actually moved higher, which is perhaps a bit of an indication that money markets think that there may be a more measured approach by the Reserve Bank at the moment rather than deep cuts that would push the Australian dollar lower.
Well, and you said earlier that there were some mixed signals out there, weren't there, in the lead up to this decision?
Yeah, there are some mixed signals. On the one hand, some indicators are very strong. The mining sector is very strong, but yesterday we saw from from TD Securities, the Melbourne Institute, that pretty much inflation has flatlined, no growth in inflation at all, which means that gives the Reserve Bank a reason to cut interest rates, which is perhaps a reason that they have given today, but also business profits are down as well. But this week there are some pretty big indicators that we're looking out for. Official labour force figures out on Thursday, which are expected to show a rise in the unemployment rate to 5.1%. That's something that the Reserve Bank will be keeping a very close eye on. And also tomorrow, the official GDP figures. So there's a bit of a way to go, and perhaps by the end of the week we may have an entirely different set of figures to deal with when looking at the Australian economy.
Well, given all the volatility out there, I'm sure we will, Peter. Thank you.